Good morning. This is Dan Frio, the morning market update. We're going to go over what the stock market's doing, what the cryptocurrencies doing, what mortgage rates are doing, and what the bond markets are doing. I don't think you're going to like any of it. Don't go away. Okay, folks, so where are we? It is February 25th, 2021. It is 10, what does my glasses say? It is 10:18 a.m. Central Standard Time. Stocks are under pressure. Bonds are taking off. Mortgage rates are spiking. And the cryptocurrency is flat to up. So let's break this whole scenario down. Here's basically what's going on. We're at the end of the pandemic. We're not at the beginning of the pandemic. There's going to be a glut of medication out probably within the next 2 to 3 months, that there's probably going to be more vaccinations or more vaccines available than there are people. Every day you see Johnson & Johnson and other companies coming out with vaccines. Awesome. That's awesome. However, here's what's going on. Because of the low rate environment. So basically the Federal Reserve had the federal funds rate at basically 0%. Okay, that's what banks borrow from other banks. Okay, that happened to help facilitate the economy, help the economy keep going. So they started doing stimulus. Once this package is done, the new relief package, we're going to be over $5 trillion in a relief package. Okay, so that's going to cause inflation. Period. It's how things work. If you oversupply something with something, it's going to push things out of whammy. So, but what's happening is basically any secured investment you had, treasuries, savings account, checking account, mutual funds, or money market accounts, your return on that money was basically zero. Okay, so because of that, actually the Fed and the government was, I'll say, not forcing you, but kind of giving you no options to get a rate of return on your money, because inflation, it deteriorates the value of your dollar. So let's say, for example, inflation is 2%. That means goods and services are going up at a pace of 2% a year. So if you have $1 and you do nothing with it and hold it, it's going to be buy you less next year, buy you even less the following year, and so forth. So you have to take your dollar and put it to work somewhere to at least hit the inflation rate. If you hit the inflation rate, let's say inflation's 2%. So you need a 2% return on your money each year to just keep that dollar worth $1. Okay, purchasing power. Well, when you have bank accounts at zero and every other account at zero because of what the Fed's doing, it forces you to move your money somewhere else. So that those other places, and this is why I created Scrub, stocks, crypto, real estate, and bonds. You can't get any returns in bonds. You might not be able to buy real estate. It leaves you cryptocurrencies and stocks. Cryptocurrencies are pretty volatile. And I say, in my position, I use a small fraction of my assets and put it into cryptocurrencies and other areas of that form. So I can get, hopefully get a good return, or at least hedge myself against inflation. Okay. So that leaves you the stock market, which created, us hitting all-time highs every day. However, now we're starting to see bond yields go up and up and up and up. And they've went up about fourfold in the last 6 to 9 months. So now what's happening is now you have a competitor to stocks. People are saying, well, stocks are really overpriced right now, I think. So I'm going to move my money or portions of my money into bonds. So as you're selling stocks, it's going to drop the value. Well, as the value drops, it could trigger other selling and other selling and other selling, which causes the market to continue to go down. And in many cases, it over-adjusts. Okay, so that's what's going on in that part, that section. That's what we're seeing right now. We're seeing, and I'm going to show you that bond prices or treasuries are having their yields are going up and up and up and up and up. Also, what's happening is the Federal Reserve steps in and they're buying mortgage-backed securities to artificially keep mortgage rates low. They're continuing to do that, but now you have a lot of investors not buying mortgage-backed securities and driving the price down because we have this finite amount of bonds, but we have less demand, so that's pulling the prices down and yields higher. And you're going to see there's a pretty dramatic change today. Guys, I'm not making this stuff up, and I'm not a fear monger. I'm giving you the facts, the trends, and the data that I'm collecting and just giving you my opinions. I'm a mortgage lender. I've been doing it for over 33 years. It's my livelihood. I do this channel to educate and entertain you guys, to let you know, here's how I position myself in stocks. Here's what I look at. Here's what I review. Here's what I'm looking to add to my position now and why. Same with cryptocurrencies and everything else. So I have no agenda other than to try to educate you guys and entertain you guys in these areas: stocks, crypto, real estate, and bonds. So let's go on and see what's happening in the markets today. So I go to Yahoo Finance and CNBC. Right now we have the S&P down 26. We have the Dow down 116. We have the NASDAQ down 170. We have the Russell 2000 down 26. Okay, stocks mixed, tech shares pressured as yields climb. Okay, that's one of the biggest things there. So that's what's going on right now, and that's basically the backdrop of a lot of this stuff. Please also watch what some of the headlines say. For example, pending home sales fall for the 5th straight months. So I'm thinking, oh boy, I'm looking to buy a house. Maybe this isn't the time to do so because home sales are plummeting. Well, let's dig into that and see why they're plummeting. Well, the main reason why they're plummeting is pending home sales fell in January because there are simply not enough homes to match the demand. Okay, so please read that. You can't buy something or something can't sell if it's not for sale. So there's pent-up demand for housing. There is. That's a fact. That's why I did a video the other day trying to debunk the housing crash that people were using as bait click to say, oh my goodness, the housing market's going to crash, and why. So check out that video if you're concerned about the housing market crash. So that's what we're seeing right here. Let's go to CNBC. The weekly jobless claims dropped sharply, but labor force remains challenged. Well, what's happening here is you have a $1 trillion stimulus package going out that's going to increase people's benefits and also give them money in their hand. So talking with a lot of people, there are a lot of workers out there that are saying, you know what, I can get unemployment through September. It's more money than I make at work. I'm just going to take the benefits. And that's why there's a challenge in the labor department. Okay, so that's just what's going on there. I go through, and I said this before, I go through a lot of manufacturing areas on my way to work every day. Almost every one of those companies has help wanted signs out. So that's basically what's going on in a lot of this sphere. And then you're going to see cryptocurrency news and other stuff. So basically just be very careful on what you're buying. The economy, the good news behind all of this is as yields go up, people go back to work, the stimulus package gets out there, the vaccines get out there, the pandemic starts to ease. We're going to have a fast, quick, and robust reversal in the economy. I've been saying that for 6 months. I said, give it spring and summer, and you're going to see things start to go out the roof. So let's go to our watch list of stocks that we watch and monitor. Many of these stocks are in my portfolio. And so we go through here, and let's see. There's a huge amount of red. Okay, so what's those? The staples behind all of this that I follow is, and what I call staples, it should be in everybody's portfolio, is Google, Amazon, Apple, and Facebook. What are they doing today? Google down 1, Amazon down 0.5, Apple down 1, Facebook down 0.6. Okay, so what's in the green? Well, when I'm trying to hedge against the stock market and inflation and the printing of money, cryptocurrencies. So we have Grayscale Bitcoin Cash up 0.1, nothing major, nothing to write home about, but it beats being down 2, 3. Okay, I'll rather have green than red. Bitcoin up 2.5%, Ethereum up 0.8. Now we go back down to the technologies that flush out or actually allow these areas, cryptocurrencies, to function and work. So we have Hive blockchain up 8% today. Let's go to Marathon. Marathon Patent up 5.8% today. And then we have Riot up 0.38 today. That's nothing to write home about, but I will take all day long an 8, a 5, and a 0.4 gain versus a 5% loss. Okay, so that's what's going on there. I've been adding to my positions in Disney. The reason being is when the economy turns, Disney's going to make a move. There's probably some profit taking in here right now because Disney's been on a nice little run recently. But the one area that I'm actually going to add to my position here right now is XLF. XLF is an ETF that trades that's the financial sector, banking. As yields increase, banks are going to make more money. I'll leave it at that. Do your research on XLF, a great ETF to buy. I own it now, and I'm going to add to my position there. With all this stimulus packages and everything else, what's going on with the dollar? Well, it's following suit like I expected. It's down. We're down below the 90% trigger. Let's see if we're down below where I expected us to be or trade, and we are. I've been saying we should be trading at or below this black line, and we are. So that is following suit there. Cryptocurrencies, what are they doing? Well, let's get up to it. Bitcoin up 3% today. Ethereum down 0.5% today. The other positions that I hold, but you have companies like Cardano up 16% today and so forth. But I'm just going over my holdings. The other holding I have is Litecoin. It is up 11% today, and Bitcoin Cash up 5% today. So those are where I follow in cryptocurrencies. Okay, so that's what's going on with those. Now let's get to bond yields and mortgage rates. MBSs are down 78. Awful. Let me explain how this works. Okay. How bonds work, even mortgage-backed securities, which is a bond that trades on Wall Street, the lower the number, which we had here, it was down 78 basis points. That means the price dropped, okay? What happens when the price of a bond drops? Well, rates go up or the yield goes up. Let me explain this. You have a bond. The bond matures next year for $100, okay? Let's say you pay $100 for that bond. So the price is up. What's your rate of return? What's your yield? If you paid $100 and next year you got $100 back, your yield's zero. So your mortgage rate would be zero. Okay, this is an extreme example. So the price drops. So let's say the price drops to 50. So you paid 50 today. Next year that bond, you cash it in, you get 100. You paid 50, got 100 back. So you paid lower amount. What's your yield now? You doubled your money from 50 to 100. So that mortgage rate or that rate of return would be 100%. So do you see, as you pay less for a bond, the yield, the mortgage rate, the rate goes up. So this is a dramatic swing right here. It's big. Okay, just to put it in perspective though, what happened last year at this time? Well, the pandemic started and we plummeted all the way down to here. So let me put a line across there. All right. However, when things stagnated, the Fed stepped in and said, we're going to start buying mortgage-backed securities. So you have now X amount of supply. You now have big demand that should keep the prices up. Okay, because you have big demand. The Fed stepping in, buying a ton of these bonds. So you had a stagnant period. What's happening now, though, is people are saying, you know what, this mortgage stuff is getting a little too risky, and I think yields are going to start going up and so forth. So they're not buying as much mortgage-backed securities. They're going into treasuries because the yields are there and it's backed by the government. So people are more secure buying U.S. treasuries because now the yields, they're not zero anymore. There's a good yield on that you know you're going to get. So they're like, I'm going to scrap this. So now you have the demand for this has weakened, and you're causing the prices to drop to a point that somebody's willing to buy that at that price to obtain that yield. Hope you get it. So when I'm going out there saying, guys, rates are going up, I don't know what tomorrow's going to bring. But based on a lot of these trends, let's go back to where we are in the last, just say, quarter. This trend is not good. If this is a stock, I'm like, I want out because it keeps dropping and dropping and dropping. I'm not trying to fearmonger you guys and say, you better lock now because you're going to miss out. I don't think we're going to get back to here. There's no reason, once this pandemic ends, there's no reason for the government and everybody to step back in and still try to subsidize the economy with stimulus. So yields are going to go up. Mortgage rates are going to go up. Now, I'll admit it, I didn't think they'd go up this fast. So I'm expecting that we overcorrected, but we're not going to go back to these all-time lows that we saw because there's no reason for it and there's no need for it. Okay? You might disagree with that. I'm just telling you what the economy is telling us and what the Fed is telling us and what the markets are telling us. Okay, that's that. So here's what I do for a living, guys. I'm a mortgage lender. My name is Dan Frio, and I have my own team at Preferred Rate. I have 12 mortgage advisors, a team of underwriters, processors. We close your loan, we fund your loan and everything. If you'd like to reach me, because people are saying, I'm calling in, nobody's answering, or I'm doing this or doing, it's pretty easy to track me down, guys. Here's my phone number, 844-775-5626. Again, 844-775-5626. My email, this is the best way to get me, is D for Dan Frio at preferredrate.com. This is what I do for a living. Again, guys, I am not a stockbroker. I'm not a wealth advisor. I'm not a financial consultant. I'm a mortgage guy. I do these videos for entertainment purposes and educational purposes only. I'm telling you what I'm doing, how I do my research, and what my thoughts are. So God bless. I do post a video every night around 4 or 5 o'clock Central Standard Time, giving you the rate update in regards to mortgages, and it's followed by realtors, financial planners, mortgage lenders, and a slew of other people. There's a lot of people commenting down in the descriptions below that are not me. They don't represent me. So be careful on the answers that you get down below. But if you want to reach me, like I said, I gave you my phone number, my email address. I'd love to talk to you. So God bless, guys. Take care. Have a great day. I'll see you at 4. Bye-bye.